Hello and welcome to Tuesday, 11th of March. Starting the day off a little late here at 9:28. My goodness, I might as well have just waiting for market open at this point. But market events going on today. Any sort of news or any data that's coming out that could potentially affect the market or provide some sort of volatility. We're looking at 10 a.m. We have Joel's job openings, which could provide a catalyst for a sporadic movement. And then we have Trump speaking, but that's at 5 o'clock, so we're not really worrying about that. We're just taking a look at possible 10 a.m. volatility. So I've gone ahead and drawn in some of my more key areas of interest, my point of interest, my POI, if you will. So we're looking at the left side here is the 60-minute, and if you're ever confused, just look at the bottom here. It shows you the ticker as well as the time, 60-minute, and then on the right side we have the 15-minute. This is usually where I take a look at my trade thesis. This is where my trade theses are formed. So over here, we're taking a look at several things you'll notice. So if I was to completely remove all of this, I have an indicator that shows you fair value gaps. So you see one on the hourly, we have a bullish fair value gap. And then we have an enclosing bearish inversion, right? So this was an hourly bearish fair value gap that we broke out of it. And the thing is, both of these are fairly untested. So untested fair value gaps make for amazing draw on liquidity, which means that markets would love to test this area again. And it usually comes back down to test it, especially inversions. So this is a clean, fresh inversion, meaning it just broke out once, but it never came back to test this area. And on top of that, on the right-hand side, I'm taking a look at a 15-minute right here, which is also encompassed within the hourly. So nested fair value gaps are very, very powerful. So usually what I do is I look at the hourly for my main fair value gaps I play off of, and then I look at a 15-minute to see any within this area. So here we are, and I think it's just 9:32. Yep, so market already opened. We're already trailing down here. I wouldn't be surprised if we tapped into here and then tried to make a break out. But the other thing we want to take a look into is this hourly bullish fair value gap, which came from way back when, these candles right here. So this is coming from 11th of September 2024. But we came back to the bullish fair value gap and then we bounced from it. So now what am I thinking? I'm thinking of building the trade plan, and the trade plan is fairly clear. So I usually have two trade plans. One of them I kind of favor more based on order flow, which is just what the market is doing. The market is downtrending. Context is the fair value gaps. What is the fair value gap showing us? We bounced here. We created more fair value gaps over here that we most likely can respect. And now the setup. So there are two setups, continuation or reversal. So the thing is, if this is a reversal, right? If we come all the way down here and then go like this, that's a reversal. So that's the reversal pattern. So I'm looking at the price to come down into my POI, and then on a lower time frame, like the 2-minute or 1 minute, see an entry point of a continuation bullish fair value gap or a reversal, a bearish inversion fair value gap to take it long. The other thesis that could happen is, say we come down here, we try to go up, we tap into this liquidity area right here, fail to break it, and then go down, and then that would target at least the halfway point or the very bottom of the large 1 hour bullish fair value gap from September. Now, that was the trade analysis and plan. Very simple. Don't want to overcomplicate anything. And this is the lower time frame. So I look at this as entry points. So where could we enter? What is price showing us? Look at all this nonsense of a chop right here, right on the 1 minute. So I have it laid out where my lower time frames are 5 minute, 2 minute, and 1 minute. And look at that, off to the races. So we're trying to go up here. This could be another good point of a liquidity sweep if we go down. But again, this move, there's nothing to take here, okay? It came down to our 15-minute, really chopped around, went all the way down here. I'm not really seeing a good move. right? I don't even see a lower high, matter of fact, right? Which is one of the bigger confirmations I like to look at what price does. This is a lower low, which is counterintuitive for a bullish movement, in my opinion. So I don't want to front run this. I don't want to chase this train, right? Let it go. Clear this liquidity point right here. So this liquidity point has been taken. Let's see what price does. Okay, so just taking a look here again. Took out that liquidity up top here. We're coming down. Price is fractal. Look, another liquidity point that could prove. Well, this liquidity point above isn't as profound, I would say, as the one we just swept down here. This is a clear indication of selling pressure. So you want to see if this clears and then what happens. So a 5-minute inversion got blasted through. Then we have the bearish inversion. So it did go up, reclaim liquidity, and then slump down, which is what I was expecting. But we don't know if this comes down here in the chop zone and just decides to go like one candle all the way up, right? Take out the top liquidity too. Seen some crazy stuff, so you never know. But again, this move, still no entry, right? There's no retest. If you remember from yesterday's video, you don't want to get into impulsive trades. You want to see the second stage delivery here. It should break. And then the second move is where you want to get in. So it's usually the retest, right? I'll take it. Okay, I'm in on the 1 minute. So the 1 minute bullish fair value gap breaking into an inversion. I want to go for, I don't like it. Like, where's the clear? Oh, there you go. So let's see. Clear liquidity targets at the very bottom. So let's see if the 1 minute holds here. Doesn't seem like it. So risk should be proper based off of the fair value gaps. Reward all the way down here. All the way at the very bottom start. That 932 low. Very choppy. Price is violently trying to push up here. One super red candle could be trapped, right? It could come down here and then try to go up. So it just broke the 1 minute and then it's still in here, but we have the 5 minute inversion. Yeah, because look, when you look left, this is a chop zone right here. So we're most likely going to chop here too. Don't like this price action very much. Gives a lot of room for wicks and non-clear deliveries. And stopped. Amazing. So thesis was right, but man, this... Then again, I don't know. The violent movement, yes, comes down here. It could easily wick up to. Look at that. $300. 307 ticks stop just on that candle. Madness. Kind of want to take it. But news is violent. Look at this. Look at this. What kind of madness? Look at the wick on the 2 minute. My God, what is this? All the way from down here on the 2 minute, all the way up there. Just the fat doji. And now it's gonna, yeah, it's too slow, too slow. You snooze, you lose, right? Maybe this is the move, right? This looks more promising. Solid candle, right? Especially when it wicks and it still keeps coming down. There's a good chance it'll eat it up, but we'll see. Look at that, straight to our liquidity target. But yeah, very, very choppy. Very choppy. I'm not sad that I missed it because it's very unclear as to which point would you have taken here. Like where did it reverse from? Well, thanks for joining. I hope to see you tomorrow. Hopefully we get a nicer move with this added change tomorrow, and enjoy the rest of your day. Again, feel free to follow me on Twitter. That's where I post often, and subscribe to the channel.